Hey guys, it's Nicole Gibbs, ATL Insurance Chick, and I'm super excited about this conversation that we're about to have about life insurance. So, a lot of people feel like life insurance is not a necessity. Some people put their cell phone insurance over life insurance. I see a lot of people that care more about getting pizza insurance. That's still, but when I saw that Domino's had insurance, the fact that they even created that means that people would buy it. So that's kind of weird to me, but they won't buy life insurance. And I think the reason a lot of people don't buy life insurance is because they really don't understand it. And they also have this negative connotation of sleazy car salesmen. We get a really, really, really bad rep. So I want to kind of change the narrative with that. So that's the reason for this video. Let's go ahead and start sharing some of my screen with you so you could follow along with me. The thing about life insurance people don't know is that life insurance now has this thing called living benefits. So old versus new. Old versus new. Old versus new insurance basically means that your life insurance can do more than just pay a death benefit. When my grandmother and her mother and like my great grandmother, when they bought life insurance, or if they bought life insurance back in the day, a lot of them bought decreasing term policies. And I'll get into all of that in just a second. But a lot of people bought policies that was basically null and void when it was time for them to use it. And I think that is the reason why a lot of African Americans, they don't really understand the whole life insurance thing and how it's a tax-free benefit. People don't understand the whole logic of you're literally, I've seen this couple when I worked at State Farm basically spend $40 a month on a term policy. She had 2 kids. Her husband bought a term policy for $1 million from State Farm, was in a horrible accident on 285, and $40 a month gave his family $1 million in coverage. So it basically makes up the income that your husband, your spouse, your partner, even your mom, even stay-at-home moms, people think, oh, she's just a stay-at-home mom. She is significant to the family because she's the one that kind of keeps everything in rotation. She does the babysitting, well, not babysitting, but she takes care of the kids. She cooks, she cleans, she washes clothes. She keeps what I'll say is she keeps the oil burning when it comes to a family. So it's very important that people understand that stay-at-home moms are just as valuable as the man that goes out and earns a living. I also want to say that a lot of people realize how valuable stay-at-home moms are once the whole coronavirus thing hit. I know I did, because having to homeschool my 2 sons, it was a lot. And it was a hard balance for me. So I commend all moms that teach their kids from home. And I also commend, anybody who already has life insurance and just wants to know a little bit more, or maybe wants to present this video to them. I hope I can simplify this in a really simplistic way for you. So living benefit, old versus new. The 4 categories of living benefit kind of falls under if you die too soon. So if you die, if there's an accident, if anything happens, your family basically gets the money that you've been paying to an insurance company for. Whoever you decide the beneficiary is, that's who will get the money. The beneficiary is normally the person's spouse, a sibling, someone that they trust, someone that they know is going to do right by the money. I always tell my customers, if you do not have a lawyer, or you do not have like estate planning, or you don't have someone to kind of direct where the money should go, how it should be allocated, and you could avoid probate once someone dies, write a poor man's will. What's a poor man's will? Poor man's will is just basically directions on what should happen if you were to die. You get it notarized at the bank, you seal it up, and you give it to someone who you trust or whoever you chose your beneficiary is. Remember, the beneficiary is the person that will receive the funds once you pass away. That's the person, that's the money goes to that person. So you could do a poor man's will, and if that's just too complex for you, or you just feel like you need something a little bit more reputable, you know, if something were to happen, but you can't really afford an estate planner or a lawyer, you may want to go the Legal Shield route. I know Legal Shield actually has like some, they actually create a will for you. And if you have any questions when it comes to things like that, they're readily available. So that's another option. And then, of course, the last option is actually just getting with a lawyer and planning out the directions of how you want things to go once you pass away. So that's the first benefit of a life insurance policy. It pays money to your family once you die. Because guess what? One thing about it and two things for sure. We will die. Now, the next thing is, if you don't die and you outlive the policy, there's data and statistics and research that basically state that people are living much longer now. And what that means is people are living until they're like 86 plus. So let's think about this for a second. If you have been working your entire adult life from 18 all the way until about, if you work from 18 to 65, if you're like a traditional person that, you know, committed yourself to a job. People don't do that anymore, but there are some people that have. I met this lady last week that has been with the company for 20 years. That's like so far in between, it doesn't make sense. But if you worked for that amount of time and you retire, so you retire at 65, and from 65 to 85, that's 20 years. So 20 years of living outside of working is what a lot of older people are doing. A lot of older people are living longer. I feel like we're living in the age of information. Everything you need is right at your fingertips. So with understanding that, we're learning a lot more. We're reprogramming our minds. We're changing the narrative when it comes to certain things, things we were taught that might not necessarily be true for us. That's really what's going on. And a lot of people are taking on the holistic approach of healing themselves and just doing different things outside of opioids and medicine and prescriptions to live longer. So that's the reason why we're living longer. However, you may get in a situation where you get sick. So if you get sick and you have a heart attack, you have a stroke, you're diagnosed with cancer, anything like that, the life insurance policy that you choose should actually cover if you were to get sick. That's the first thing. So if any life insurance person comes to you talking about getting life insurance, the first thing you need to ask them is, does this life insurance have living benefits? Does this life insurance have capabilities that I could use while I'm alive? I think it's a great business model that the life insurance companies have come up with to assist their insurers with not feeling like they're paying for something and it's only going to benefit the person that they leave the money to. So I think the living benefits portion is really good. So always ask that person that. So the new kind of life insurance actually takes care of you if you get sick. Also, life insurance, people don't know this, but life insurance has a cash accumulation capability on the whole life side. So I'm going to talk about whole life versus term, or permanent insurance versus not permanent insurance. That's basically how you're going to remember term versus whole life. So insurance companies have now figured out a way to kind of play in the market but not be in the market and allow you to grow money that you could use tax-free. And I'm going to talk a little bit about that. And lastly, I'm in retirement consulting, retirement planning. So life insurance has been used as a strategy to assist retirees with income. Because think about it, if you don't really have a pension or you didn't save any money supplementally, you're not going to have anything but that Social Security check when you get old. And for me, I pulled mine up. I have a statement basically saying that I'm going to get $1,200 in Social Security per month once I retire. $1,200, 25 years from now, hold on, wait. I'm not trying to tell y'all my age. 25 years from now, $1,200 is not going to go far. That's all I'm trying to say. So that's what the conversation is about today. Living benefits. So policies with living benefits basically take care of chronic illness, critical illness, and terminal illness. So you're probably like, okay, what are the differences? I'll tell you the differences. So let's start with chronic illness. So a chronic illness is basically when a doctor has certified within the past 12 months that you're unable to perform 2 out of 6 activities of daily living for a period of at least 90 days without assistance, or that you are generally cognitively impaired. So chronic illness comes in the form of where you can't really move your arm. It's come more in the form of a disability, and you can't do 2 of the 6 activities of daily living. What are the 2 of the 6 activities of daily living? Whenever you hear these terms in the insurance world, be sure to ask your agents these questions. But bathing, dressing, eating, toileting, transferring, and continence are the 6 activities of daily living. So if you can't do 2 of those 6 things that I just listed, then you actually qualify for a chronic illness. Now, because I'm contracted with a lot of carriers that actually call these benefits, these living benefits, they call it accelerated benefits. And sometimes they ride on the policy. And what that means is riding on the policy means that it kind of like just tags along, you know? And you can pay for this coverage with certain companies, and then certain companies actually offer this coverage additional to you paying for the life insurance. What I like about one company, National Life Group, or LSW, they have a life insurance program to whereas in if you qualify for their life insurance, you actually get these benefits for free. So let's just say you say, okay, I'm going to get a life insurance policy for my family in the amount of $1 million. And the reason I'm using $1 million is because $1 million in coverage for a 40-year-old is about $98 a month. And I think that's pretty darn good for a life insurance product. The fact that you could pay $100 a month for $1 million in coverage is amazing. And that's on the term or the not permanent basis. I'm going to explain the term in just a minute. I want to use some graphics and some visuals to kind of give you an idea of what that is, but I kind of want to go through the living benefits before we go to that. So the chronic illness is one of the things that that takes care of living benefits. Critical illness is very popular, especially in certain communities. So critical illness basically includes blindness, heart attack, stroke, a major organ transplant, heart valve replacement, cystic fibrosis, did I say blindness? ALS, things like that. If you were to become critically ill, you actually could use the money from the $1 million of death benefit that would pay out to your family if you were to pass away. You could actually use the money in the death benefit. Now, some companies put a cap. They're not going to give you the whole $1 million for sickness, but they'll give you maybe 50 to 75% of that amount. So when you're talking to your agent, make sure that you understand how much would be available if you were to be, if you were to have a heart attack or you were to be diagnosed with one of those critical illnesses that I mentioned. So the company will accelerate. Accelerate means speed up or provide to you now. They will allow you to use that from your death benefit. And what they would do is they would subtract it from the amount that you would get once you pass away. So I think that's huge. I think that's big. I think that covers you, instead of having Aflac policy, a cancer policy, a this policy, a that policy. You don't need all that. you need to get a life insurance policy that basically covers your health if you were to get sick. And then you could actually reallocate some of that money into your life insurance policy. So those are some strategies that I kind of work out with my clients. Critical injury is not on here, but critical injury kind of falls under the critical illness. And a critical injury is something like a severe burn, a traumatic brain injury, paralysis, and a coma, anything where you are like stuck and can't move, and it's like super duper 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 bad. Like, you live, but you almost died. So that's what a critical injury is. National Life Group actually has critical injury added to their living benefits lineup, and I think that's really, really good. The last thing, terminal illness, is generally if you have been diagnosed with a terminal illness that will result in death within 24 months. In some states, they do 12 months in some states, but if you have been diagnosed with a terminal illness that will result in death within 24 months of certification of the illness by a physician, you actually could use the death benefit amount for that particular illness. Medical bills is one of the reasons why people lose their homes. Medical bills is one of the reasons why people file bankruptcy. Medical bills is one of the reasons why a lot of people are in debt right now. So if you have an insurance policy that would take care of your medical bills, why not take up that option? Because let me tell you, I was talking to one of my clients, came in wanting to get life insurance, him and his wife, and he made a joke, oh, I don't want her to have her husband in the house that I built, and they living off my insurance benefits. What? You're dead, so it doesn't matter, like, all jokes aside, you're not going to be here, so you're not going to know. So that's basically, I'm like, you're not going to know, you're not going to be here. So to make sure your children are good and that the mother of your children are good, why not get a policy that is going to take care of that? So yeah, I think it's important that people understand the importance of life insurance when it comes to them, especially if your wife isn't working or if your spouse or partner isn't working. You need something to step in once you pass away. The thing about living benefits is that it could be used for household expenses, home modifications, nursing home care, regular bills. You could use your living benefits for those things, because when they give you the money, they're not giving the money to the doctor, they're not giving the money to the practice, they're not giving the money to the hospital. The money is actually coming to you, and it's coming to you, guess what? Tax-free. That's the biggest advantage of having a life insurance policy. Uncle Sam cannot tax that $1 million that your family will get. Another great thing to know is that whatever debt that person was in, they cannot take your life insurance money and pay those debts. The debt basically dies with you. So now, outside of like a mortgage or something like that, but credit cards, student loans, all that good stuff, you don't have to take that life insurance money and pay any of those things. I'm not saying be irresponsible. All I'm saying is you don't have to use the life insurance for that, okay? You can use it for some of the other things that we talked about. I wanted to kind of let you see that a stroke occurs every 40 seconds in the US. 1 out of 3 adults will have at least one chronic illness. If you look at these stats and you see that somebody, it says 1 out of 3. That's a lot of people. So 1 out of 3 men and women will develop cancer in their lifetime. The cancer actually takes care of the terminal illness. There's a story about a young woman, young single mom banker, who basically became diagnosed with cancer. And even though she had a great job as a banker, she worked in the bank, she was smart enough to buy life insurance for herself. I guess, single moms, we kind of think about our kids. So I meet a lot of single moms with life insurance, but I meet a lot of families that don't have it either. But anyway, that's neither here nor there. Anyway, she was diagnosed with cancer, and the first thing she did was she contacted her life insurance agent and was like, hey, I am not going to be able to keep paying for this. And he was like, what's going on? What's wrong? You know, how can I help you? And she was like, I just been diagnosed with cancer and I'm going to have all these medical bills and blah, 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 boo. He was like, you don't need to cancel this. You need to file a claim. She was like, file a claim? What do you mean file a claim? And I'm not going to tell you the rest of the story. You can go to my Facebook page, ATL Insurance Chick, and you can actually find that video there, and you can see how she was able to use her life insurance policy to take care of her medical bills. So I think it's very important that you understand that living benefits means that you could use the money while you're alive. So that is that's something that I think a lot of people don't realize. Life insurance is a unique financial tool that can be structured to accomplish many objectives, and it can be customized to fit very specific needs. So that kind of allows me to segue into living benefits. We talked about that. Segue into term versus perm. So I'm going to go to my Instagram. You can follow me on Instagram, ATL Insurance Chick. Let's go to my page. Here we are. So there's a ton of information here. I think that you should check out a ton of resources. I am looking for term insurance versus whole life insurance. This is also another question that I get. If you died tomorrow, how much cash would your family need to maintain their quality of life? How much can you afford to pay? These are some of the things that you want to think about when you are shopping for life insurance. Also, you need to figure out how you would distribute the money. Who would be the beneficiary? Who can you trust? Those are some of the things that you need to think about. Your agent is going to help you think about some of these things. And a lot of people say, oh, I have life insurance with my company. But guess what? Your company doesn't allow you to take your life insurance with you. If you were to quit your job, start a new job, start a business, it doesn't transfer with you. So it's always great to have insurance outside of work. Alcoa was a company last year. Was it last year? Yep, it was last year. This company basically dropped their life insurance for 9,000 retirees. Do you know how many people that is that did not have life insurance and probably couldn't qualify? And that's the other thing I want to tell you. You may not qualify for life insurance if you don't get it early. When you get life insurance super early, you are basically very healthy. You don't have a bunch of things on your medical information bureau, MIB. That's one of the things that insurance companies look at when they are trying to determine if you're a risk or not. So it's very good to go ahead and get, I'm not trying to show you all my posts. I'm actually trying to find, term versus perm in the easiest way. So what I'll do is I'll just kind of run to my website. You definitely want to go to my website and kind of check out some of the information there. A lot of the information there can help you figure out what would be best for you. So here we go. So term is basically temporary insurance. They're specified in years. They normally start at, State Farm has a 5-year policy, but most policies start at 10, 15, 20, 25, 30 years or whatever. So within that amount of time, if you were to pass away, you would be able to get the death benefit. Term policy are what we call not permanent policies. It's like renting a home. It does a job, but you never really own it. So you never own this policy. It doesn't accumulate cash. It just basically takes care of the death benefit if something were to happen to you. A lot of people that choose term policies, I put a lot of my clients in term policies if they're newlyweds, if they're starting a family and they need a large amount of coverage. term policies are always cheaper than permanent coverage because the insurance company is like, okay, term policies really don't pay out that much. But if we did have to pay out, we're only paying out maybe 10% of the term policies that we have in our book of business. Whole life policy, which is permanent policy, it lasts your whole life. They know they're going to have to pay that out. There's no cap on when it expires. It never expires. So a whole life policy is always going to be a little bit more expensive, even if you're young and healthy. So always remember that. So term policies do not accumulate cash or build cash. And as I stated before, it is great for young adults. It is the lowest costing life insurance that you could get. So you may want to consider getting that if you have kids and you have a family and you want to make sure that your family has a substantial amount of money or income. If something were to happen to you, term is the best way to go. I like to couple term with whole life because term is so cheap, especially depending on your age and your health. You basically can be paying $20, $30, $40 for a large amount of insurance. I just wrote a $500,000 policy on a 40-year-old for about $49. So think about it like this. $49, let's do the math, y'all. $49 times 12. Let's do that. That is $588 in annual premium, or annually the amount you would pay per year. If you have a 15 or 20-year term policy and you have the policy for 15 years, let's just multiply $588, which is the annual amount, times the years of the policy. So if you get a 10-year policy, that means you've only paid $5,880 for that term policy in 10 years. What does that mean to the death benefit? If your death benefit is $500,000 and you die within that 10 years, you have never paid the amount that the insurance company is going to get you. So you're literally buying money. You're literally buying money. That's how you have to look at life insurance. You literally can flip the switch and change your family's situation just from getting a $500,000 policy, $250,000, $750,000, $1 million. It doesn't matter. You'll never pay the amount of the death benefit that your family is going to get in premium. You're never going to pay it. On to the next. Whole life. So whole life is permanent. It is fixed payments for the life of the policy. You're guaranteed to get your death benefit. The thing about permanent whole life insurance policies is that it guarantees a cash value once the policy matures. So as you're paying into the life policy, you're paying for the death benefit amount, and then a portion of the money kind of goes towards the cash, and it accumulates over time. So a lot of people borrow from their policies. A lot of people will use strategies of building cash for their kids to go to college because it's tax-free money, versus buying a 529 plan. A 529 plan is basically what a lot of people use to save money for their kids for college. The only thing I don't like about a 529 plan is that you can only use it for education. You can't use it for anything else. The great thing about a life insurance policy is that you could use it for college. You can use it if your child wants to start a business. You can use it if your child wants to put a down payment on a new home. The earlier you get the policy, the more money is going to build in it. That's what I like about the whole life policy. It's great for retirees because you can get it in the form of a final expense. If you hear that term, final expense policies are mostly for older people or people with really, really, really bad health. So whole life is the way to go with that. Term, wanted to just kind of come back to the mortgage protection. If you hear that, that's a great way to protect your mortgage outside of the homeowner's insurance, because if something were to happen to you and you were to die, the mortgage protection or the life insurance term product would pay off the house, and your spouse or whoever you leave behind wouldn't have to worry about that bill. The return of premium option comes on the term policies, and it's basically what it says: return of premium. So let's say you get a 20-year term policy. let's say you pay, you know what, let's go back to the example I used with the 10 years and the $5,880. So you had this policy for 10 years and you didn't use it. It did what it needed to do, and you're just out of the money. With the return of premium, you pay a little bit more to have this option. However, at the end of the term, you get all the premium that you put into the policy. I have this particular policy because some people, when I first got into the insurance business, I was horrible about saving money. So I needed to figure out a strategy or a product or a way for me to save money without me being able to touch it. And you can actually touch the money, but you have to wait, I think, at least 2.5 to 3 years with some companies in order for you to use the premium or the money in the policy. But at the end of the term, they're just going to subtract it from what they would give you. But the return of premium is good for people who don't know how to save, or for people who are looking to save money but have a dual benefit. So imagine this. You're paying into a savings program that protects your life, protects your health. You're actually accumulating cash, and you're going to get all your money back once the term is over. I think it's just a win-win situation. So that's a great option to look at with term policies too. A lot of people use that for mortgage protection. I like to use that strategy for mortgage protection options, like somebody that just bought a house. You may have a 30-year mortgage. You get a 30-year term policy when the 30 years is over. Now, in addition to your homeowner's insurance, because homeowner's insurance covers the home, and that's fire, that's wind, that's hail, that's vandalism, that's theft. Homeowners basically covers that. But life insurance covers your life. So in correlation or in addition to your homeowner's insurance, getting a term return of premium policy, you have a 30-year mortgage, you pay your life insurance for 30 years, and your house is going to be paid off in 30 years, right? So after those 30 years, you already paid your mortgage, you're free and clear, you actually own your home. You don't need this return of premium anymore, right? So instead of the money just being wasted, you actually get all your premium back. Isn't that amazing? So at the end of the 30-year term, you have the premium from the life insurance policy, and you also have the equity that's built into the house. You can do anything from there. So if you're a 25, 30-year-old person that just got married, you might want to consider doing a return of premium term policy, because if you do a 30-year term, you're going to get the payments back. It's just a great way to think about cash accumulation and wealth. Universal Life is one of my favorite whole life policies, because a portion of the money that you pay for the premium or the monthly payments goes to the actual death benefit, and then another portion goes to cash accumulation. So if you're spending $100 a month on a universal life policy, $50 is going to go to the death benefit, $50 is going to go towards the cash accumulation, or, administrative costs and things like that. The great thing about the universal life policy is that it kind of plays in the markets, but not really. So Index Universal Life, IULs, they became very popular maybe about 10 to 15 years ago because insurance companies figured out a way to allow people to kind of take advantage of using insurance as an investment, a tax-free investment. So we can talk more about that. It's just too complex to kind of go through this. I'm just trying to give you the basics of insurance, life insurance. But the IUL is a great, great, great option for children. I say anybody under 40 is something you definitely should consider, because not only do you get the death benefit option as a benefit. See, I'm all about telling my money where to go and how to grow. And if you get a IUL policy, not only are you getting a death benefit option, but you're also getting a sickness or disability situation, you're getting that benefit. You're getting the cash accumulation benefit. It's just so many benefits that you're getting. As I said it before, the IUL, well, the universal life comes in a fixed option, an index option, or a variable option. I really like the IUL. So you definitely want to talk to your agent about that, or talk to me about that. The last type of life insurance that you can get is the accidental death policy. And the accidental death policy is really, really good for people who have pre-existing conditions that won't allow them to become insured. So if you're HIV positive, if you have diabetes and it's just out of control and you had it before 50, most carriers or insurance companies, they will not. So if I say carrier, I'm talking about insurance company. So most carriers, they will not insure people if they've had diabetes before age 50, because it's like, oh, you're old. You probably ate a lot of bad stuff along the way. So you might have high blood pressure, high cholesterol. Some of them don't even care. Like Mutual of Omaha, they don't even care about high cholesterol, high blood pressure. They don't care. Because it's like, you know, you old, you picked up all that stuff along the way. I guess that's the idea. I don't know. But some companies just won't insure you if you have a lot of pre-existing conditions. But with the accidental death policy, you're actually approved. They don't run your MIB. And I also want to talk about the fact that a lot of companies, you don't have to do a med or a medical exam or a paramed exam if you're in good health. So the way to determine if you're in good health is I submit the information over to the carrier and they're like, okay, this person is 39 years old, doesn't have any pre-existing conditions. Let's pull up their Medical Information Bureau report, MIB report. If anything is on that MIB report, as far as prescriptions, hospital stays, anything comes up on that report, then you're in jeopardy of having to explain why you have a prescription for whatever it is, or you may have to take an exam. But if you have a clean bill of health, you don't have to worry about an exam. So back to accidental death. So accidental death is something that you should consider if you have a lot of ailments and you don't qualify for life insurance. I'm sure I can get you qualified. I get everyone qualified. Now, it may not be the death benefit that you want, but I can get you qualified. Even for things like just anything you can think of, amputations, anything you think that you wouldn't normally qualify for, I can get you approved. But accidental death is kind of good to have in correlation to like an IUL or a term policy, because a lot of the way people die when they're young or anything like that is accidents. So if an accident happens, sometimes the carrier will allow you to, running out of battery, y'all, because I'm just going on and on and on. I'm super excited about life insurance and I love talking about it. I love educating people about it, and I try to simplify it so that you understand how to move when it comes to this type of thing. And I also want you to see the value of it. I think a lot of people don't understand, oh, wow, this is something that I really do need, you know? But the accidental death is good for high-risk individuals, and it doubles. A lot of times you may want to ask your auto insurance carrier if they have accidental death attached to your policy. Sometimes they're less than $5 a month. And if you have your seatbelt on, I know State Farm, if you have your seatbelt on and you get into a car accident and something happens to where it disables you or it kills you, the death benefit doubles. And you don't have to pay extra for that. So there's just a lot of little caveats and nuances that people don't know about life insurance. And I want to take the time to explain that to you all. So again, go check me out on Instagram, ATL Insurance Chick. I am also on Facebook. Remember I told you, where did I go to Facebook? Hold on, did I go here? Nope. You guys, I'm new to Apple. Here we go, Facebook. So ATL Insurance Chick is on Facebook as well. You can book time to talk with me about any of these things that we just talked about. Also, there's a ton of resources here. I am very excited about where my company is going, and I'm super excited to help you guys and get you taken care of. Just wanted to kind of drop those knowledge bombs on you when it came to life insurance. I'm very, 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 I didn't want y'all to see all those files over there. Scoot over. But, and that's my vision board too. But anyway, yeah, just super excited about helping people. My goal was to help 1,000 people, 1,000 families this year, and I'm still gonna stick to that. So if you know anyone that may need this information, if you know anyone that is interested in sitting down and just talking with me about what they already have, I'm an information hub. So consultations and quotes are always free. Ciao, Bella. See you online.